Hey everyone, David Oliver here with another taxes saved case of the week. This one's beyond exciting. This is a client we've just engaged with this year. That's newer to us, but they've seen a lot of our content, a lot of our case studies, and this is a big year for them. In fact, they're having a big divestiture. They've been high income earning business owners, but this year, as well as one of the spouses being high income W-2. But this year is one of the biggest years with them selling off part of their business. And so this is a fun one where we are going to save them seven figures in income taxes, state and federal all combined. So with that said, I'll go ahead and share our calculator. This will be a fun one because it's a very apropos strategy, especially with the broader economy. For those that are obviously tuned into the economy, following the stock market, public, private, with the buzzword being AI infrastructure specifically here. This is a great strategy we have that clients are very excited and currently engaging with to really save as much as they can in tax, but also take advantage of one of the greatest industries we think we can possibly be in right now, being AI infrastructure and GPUs, GPU leasing. So that said, I'll go share my screen here now, and we'll get right into what we did to eliminate seven figures of income tax. All right. Okay. So if you see my screen here, this couple married, filing jointly is out of the state of Virginia. Virginia has a state income tax, like many others do here in the United States. And this year, this client is going to, they've sold part of their businesses, and that is going to bring in, where their income is usually about a half a million to 800,000. This year, it's going to be over $3 million. Super life changing, but with that, obviously, the government wants their cut. So what do we do? What full advantages do we take advantage of with business structure? This client loved, like I was just sharing, a very trending and exciting cash flowing opportunity where we have helped them create an AI GPU leasing business. And I'm sure if you're following the market, you're seeing NVIDIA's revenue and demand for AI infrastructure grow about 70 to 80% year over year. The big semiconductor stocks from Micron, AMD, and even the ETFs. They are reaching all-time highs. In fact, they started at the beginning of this year at about 4% of the entire stock market, and now they are closing in on 20% of the entire stock market in value. It's one of those things where, the gold rush who got rich, it wasn't the people that went looking for the gold, it was the people that sold the shovels and the pickaxes. And what better great than that? Great strategy than that than semiconductors themselves and GPUs and the infrastructure that we can create here. So that's exactly what we did. What's beautiful about them, they cash flow so well, just like other industries we've had and been able to access from a business model. Here, we can finance just the same way, 10% down, 90% loan to value. And with that, we purchased $1 million in the new business we helped them formulate for this business right there this year, year one. And they start cash flowing like that. Of course, the debt servicing is all covered. Again, enterprise companies from Dollar General, Healthcare, Anthropic, Harness, Gusto, you name it, Budweiser, any company you can think of needs data to run their company. And AI, you need the infrastructure to do so, being GPUs. So here is the case, $1 million deduction with $100,000 outlay. The next strategy they did, many of you have heard before if you've been listening to our case studies, is short-term equipment leasing business. Another cash cow of just build to outlay, 10% down, borrow in a real structured business, remaining 90% loan to value, to again get another $1 million deduction. Excuse me, just those two folks right there, those two deductions right there, folks, saved them over $800,000 on $200,000 of outlay before fee and expense. The next thing and final thing they did to get their income to about $70,000 total, made over 3 million, reported an income of 70,000 legally, right? This is exactly how Trump paid $750 in taxes. Was it through these type of businesses? No, it was real estate. But thanks to 100% bonus depreciation, we can partake that in many different avenues. The final thing they did was a software acquisition purchase. Again, another cash flowing business, this time through seller financing. And they put down a 15% down, 85% loan to value, 154,000 to get just over another $1 million active income deduction. So right there, they have over $3 million dollars deductions, and they saved themselves year one, folks, $1,219,000, $467. 1.2 million they put back into their pocket. Now think about that, folks. If you could take what you'd have to send normally, these people being business owners, a $1.2 million check, you now get to keep in your pocket. Think about how you could grow that. Maybe you invest in more AI. In fact, that's a big thing a lot of our clients are doing, getting to partake in Anthropic allocations. What else? Invest it, we're not the government to get another bite of the apple. They're buying real estate, cash value life insurance, putting this in the brokerage account, things that they can do to never have the government take another bite of the apple. They can lend, borrow, die, take loans against the appreciating asset. So as this money appreciates and grows and compounds, the government is not getting another bite of the apple. I strongly encourage if this is interesting for you. Everyone's circumstances are very different, but if you're having a big divestiture looking to sell some stock or some assets at a high appreciated gain, please reach us at taxsave.com where we can see what we can do to help. Again, that's taxsave.com. We'll see you there, folks. Have a great week.